Hey everyone, it is Julie here with TipRanks. Today we're taking a look at two big name companies that are the most rated stocks of the week, both good and bad ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two big names that are trending with Wall Street analysts. That is Tesla and Microsoft. Now both stocks are some of the most rated stocks of the week, and one has been picking up some more positive ratings than the other. So today we're going to take a look at both companies, what has them in the headlines lately, and what these analysts are weighing in on the stock's future. We found today's companies using the TipRanks trending stocks page, which can be found on the website and also the mobile app. You can download the TipRanks mobile app by using the links in the description down below to access all of your favorite research tools on the go. Now let's jump right into our trending stocks. Trading under the ticker MSFT, the stock is currently sitting at $408 per share. They have seen growth of 62% over the past year and have climbed 9.3% in the last 3 months. Earlier this week, they did take a bit of a dip off and are down about 1%. The stock faced a bit of downward pressure after a Microsoft researcher did a report that their Copilot AI tool can create sexual and violent images, and that the company maybe wasn't doing enough to prevent this. This week, the employee escalated the matter, sending letters to FTC Chair Lina Khan and to Microsoft's board. Also this week, Microsoft hosted a partner preview event. The event ran just over half an hour, and Microsoft rolled out a hefty dozen or so trailers for upcoming games. Reception did vary from title to title. While some players weren't exactly pleased to see a Roblox-style title coming out, other more unique games were given the benefit of the doubt. Looking forward, Microsoft will be hosting a new Era of Work event on March 21st. This will focus on the company's artificial intelligence initiatives via their Copilot, plus some other updates on their Windows and Surface product lines. Looking back, last week they did host an event for analysts. And following that event, we did have a 5-star analyst from Stifel weigh in on the Microsoft stock. He said that the meetings served to reinforce our belief that this is the first time in over 2 decades Microsoft is not playing from behind in an emerging tech trend. In fact, we believe its increasing Gen AI scale will become a meaningful competitive advantage as the company is able to leverage the virtuous circle generated by its unique infrastructure and application usage-based insights to inform its future investment and monetization strategies and further distance itself from the competition. Another analyst from Jefferies reiterated that the Microsoft stock still remains one of their top picks. They noted the strong initial adoption of Microsoft 365 Copilot within IT departments showed evidence of strong corporate interest, and also noted that data governance is a top focus for AI. Jefferies believes that Microsoft valuation remains attractive given the potential for AI upside. In the past 7 days, the Microsoft stock has received 8 analyst ratings, and every single one has come in as a buy. Overall, the stock has 33 ratings and comes in as a strong buy with 31 buys, 1 hold, and 1 sell. Analysts' average price target comes in at $469 per share, which would be an upside potential just shy of 15%. Looking at our most recent ratings, all coming in this past week, they're all in the double digits, ranging from about 10% up to 22% upside. Looking further down, we still have a lot in the double digits upsides. Even the sell rating has an upside potential and a high-end price target of nearly 47%. And our second stock that's trending with Wall Street analysts this week is Tesla. And as you may know about Tesla, it often has some very divided analyst opinions. This week is no different. Trading under the ticker TSLA, the stock is currently priced at $177 per share. They've seen some ups and downs this past year and are currently down 2.5% overall and have dropped 27% in the last 3 months, cooling off over 9% in the last 5 days. Now, there are a couple of things that have kicked off the downward trend this week, one of them being a report that came out saying their China sales declined 26% year over year. On top of that, there was also a fire in their Berlin Gigafactory that temporarily shut down production. One report noted that Tesla delivered just over 60,000 vehicles last month, and that was down 19% year over year. It reflected their lowest shipment volume since December of 2022. Those sales come despite Tesla's effort to boost demand by reducing prices and offering incentives. But the performance was also likely impacted by a slowdown during the Chinese Lunar New Year celebrations. With this week's decline, Tesla has fallen out of the top 10 largest stocks, but longtime bull Cathie Wood saw this as an opportunity to scoop up some more shares. As it was reported that just a couple of days ago, Cathie Wood's ARK Invest scooped up 80,000 more shares of the Tesla stock. But not everybody is feeling quite as bullish. We did have one analyst from Oppenheimer who reiterated their hold rating this week. They noted that while Q1 is shaping up to be potentially disappointing from a results perspective, we believe the company is working on the critical challenges of scalability and cost reduction of vehicles while extending its lead in AI for the physical world. They said that Tesla is investing in the infrastructure and team to continue pushing its lead in AI for the physical world, and that they anticipate March will be critical for those Q1 numbers, given general price weakness and a slow start to the year's sales. Another analyst from Citi reiterated their hold rating, saying that they will remain on the sidelines and wait for a more compelling entry point for Tesla. Then, on the other hand, we do have Morgan Stanley, who reiterated their buy but did trim their price target. The analyst said that they expect the year to be challenging for the electric vehicle giant due to declining margins and weak global demand. They highlighted the ongoing moderation in EV demand, coupled with price reductions, may hurt the company's profitability, and that Tesla's aggressive price cuts have negatively impacted their margins to a great extent. He foresees a decrease in the company's automotive gross margins for 2024. Tesla has also received 8 analyst ratings in the past 7 days, but a bit more of a mixture, with 3 buys, 4 holds, and 1 sell. Overall, the stock does come in as a hold with 35 current analyst ratings, breaking down to 11 buys, 19 holds, and 5 sells, and an average price target of $210, which would be an upside of 18%. But you can see on the right here, we have a wide range of low to high price targets. Looking at our most recent ratings, we do have a sell rating from Bernstein with a downside of 15% and a price target from Morgan Stanley here, which is still an upside for 80%. So a wide range there. And that range continues as you look down. We'll have some with a downside of 26%, even 52% here, and some with upsides over 70%. So that is a quick look at 2 big name stocks that are trending with Wall Street analysts this week. Let me know what you think of these companies and what lies ahead for them. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any stock, just keeping you up to date with what those Wall Street analysts are talking about. So please make sure you always do your own due diligence and research. Thanks so much for watching. Have a great day, and I'll see you back here next time.